Hey, what is going on, guys? It is CryptoZerp back with another video, and this video is going to be the 3 signs to sell cryptocurrency. If you guys remember, if you guys watched it probably like a couple days ago, I made a video on 3 signs to buy a cryptocurrency, and I got some questions on when to sell cryptocurrency. So I thought I'd make this video. I think it'll be pretty helpful, because a lot of you guys are just investing a ton of money in the cryptocurrency and you don't really have a plan. You're just, hoping for the best. I mean, a lot of people are making profits, but that's only because the market's in a bull market right now and basically everything is going up. So I feel like everybody needs to go into cryptocurrency with a plan, know when they're going to get out, and signs they should look for when they should get out. I think you guys will really enjoy this, and I actually tweeted a tweet yesterday saying, if you're going into cryptocurrency without a plan, it's basically like sailing out in the ocean without a map. And that is such a good tweet, I feel like, because it makes so much sense, and it's exactly the same thing. If you're just putting money in and don't have a plan when to get out, you're basically just following what everybody else is doing, and that's not how you make some good profit. So hopefully you guys all enjoy this video, and let's get right into it. Alright, so the first one I want to talk about today is the 9-day moving average. Now, I know you're thinking, Zerp, don't you always talk about the 50-day, the 100-day, and rarely use the 21-day unless something is a momentum mover? Yes, this is true. However, I use the 9-day moving average not as a level of indicating support, but for fast runners. A lot of us are investing in things. For example, I could go back through a lot of the momentum movers like Stratus, Ripple, Verge. I mean, I could list a dozen examples where this type of strategy will work. The 9-day moving average is a great indicator to lock partial shares positions on good runners. So, for example, in this case of Mcgregor, this was a very fast mover. There was a lot of anticipation coming into it. Now, this isn't always going to apply, but it applies to around, I'd say, 60 to 80% of the fast movers in cryptocurrencies. So, as we can see, not only does it usually maintain above the 9-day average, but it goes below the 9-day moving average. It's only slightly through the wicks, and a way that I use the 9-day moving average to lock in positions, and we have to think about it under perspective of buying down in this range. For example, getting in early on, in this case a good way to use the 9-day moving average is when it ever dips. Whenever it dips below 5% of the 9-day moving average. So for example, we take a partial share here, we take a partial share here, and once it gets back, of course, we want to wait till it gets back up above as well. Now, you can set stop levels. That is something completely kind of arbitrary to what your risk and reward profile is. It doesn't really have much to do with this though. The main thing to keep in mind is that every time you break that 9-day moving average, you sell a partial share. So you lock in some profits. When you get back up there, that rule will come back to apply again, and you just keep repeating that process. You take another partial share here, you take another partial share here, but in most cases, once it gets back up against that 9-day, we've seen each time it rounds to a new high, and then eventually you have your descent breakdown away from it, and then you lock in probably your final partial share. Now, of course, the way you do this is really dependent on how you want to rate it. Some people want to take 50% of their initial time and be like, hey man, I've gone up 300, 400% on something, I'm going to lock in half of my money. So some people won't say, lock, this is going to go up to 1,000 and I'm going to lock at 25%. I mean, it's really all up to like you basically, and how much you want to, how much your risk and reward profile is. My initial sell usually consists of around 40 to 50% of my profits locked in right off the bat, and then I break down each and every other kind of partial share as I go up to the uptrend. Really, the main strategy here is taking partial shares once a cryptocurrency goes below the 9-day average. The next thing I want to talk about is a topping pattern. Now, what is a topping pattern? Well, we've got one right here in the Mcgregor chart. Tell me, what candle on this chart, I want you guys thinking real quick, because I don't want to just tell you guys everything. I want to ask you guys all what candle on this chart looks like a topping pattern. I'll give you a second. Well, I don't know what candle you guys picked, because I can't really hear you guys through the screen, but however, I will assume that you guessed this candle. Now, if you did, you're absolutely correct. This is what's known as a topping pattern. Now, everyone has tossed a few names at it, but this is generally what is known as a topping pattern in technical analysis. Now, you can probably guess why it's called a topping pattern if you know how to read a candle chart, and if you don't, I recommend you start using candle charts. Candle charts are definitely the way to go. In this case, with a topping pattern, you can see that the wicks of the candle is well over 2 to 3 times the actual gain of the day, and what that means is that a lot of this gain price action closed downward, and it was a complete FOMO. That means that buyers were coming in way too quick, and then they realized that it wasn't fundamentally sound in the sense of that price action, so it pulled back, and because of that, that speaks over all exuberance. It speaks that there wasn't enough volume, there wasn't enough reason for it to move up, and because of that, it can make this chart look very ugly. I know that sounds silly, guys, but because of that, it can lead to a lot of sell side, and it really goes to the market that something is overbought, and that is something. It's like a little too over exuberant, and as we all know, as I repeat 1,000 times, over exuberance, it can make up all the difference in just a few days or weeks, and we're seeing that right now with Mcgregor. So again, when you see a candle like this, especially for those low volume cryptocurrencies that, as much as I tell you guys not to trade, I know some of you do want to go out there and trade, but these cryptocurrencies that have these really long drawn out wicks, you want to see candles like this that have full green bars that continue to go up and confirm price confirmation. So you don't want to buy into something like this. So again, you really want to make sure that the candles have solidified price action, a lot of good healthy green candles, and of course have healthy corrections as well, and not these topping out wicks where the wicks itself make up more than 2 or 3 times the standard price action of the day. Alright, so the last thing I want to talk about, and of course this doesn't always apply to cryptocurrencies, it's just a simple signal that you can look for in the sense of technical patterns, I guess you can say. It's a head and shoulders pattern. Now, we've talked about this before on my channel, however today I want to go ahead and talk about it specifically inside of Mcgregor. Again, all 3 signals that I want to talk about today were founded on Mcgregor. It's quite simple, so we're going to go ahead and use the drawing tool. I recommend using a line tool, but in this case, a trading view, it's very drawn out. But here we go. In the sense of drawing, we just have to draw the first shoulder, the head, and then the other shoulder. So okay, so this is a very common drawing pattern in cryptocurrencies and even in stocks or like any financial investment vehicle. You'll find a head and shoulders a lot, but anyways, in this case of head and shoulders, it's a very common pattern, and it really looks like a head and shoulders. It's really much like, you know, going up your shoulder, going up your head, bouncing down again, and then going down to new lows. And as you can see, the selling is starting to pick up on Mcgregor because people are realizing this is a head and shoulders. And you'll find out a lot about cryptocurrencies that are topping out and have ridiculous run-ups, like Mcgregor. It's gone up more than 10%. It needed a correction. So you'll find this a lot when there's so much strength behind something, but after a while the steam runs out, the volume starts flowing in, the price is too overbought. So again, look for these kind of head and shoulder patterns, and ironically you'll find this a lot in these topping patterns. You'll find it when it starts to roll over and it has that almost kind of dead cat bounce, and it's like, oh, we're gonna get back to those highs, don't worry about it, and then you get caught in the bear trap and you get pulled down, and of course you start losing your profits. So these are 3 great signs that you can start using and know timing the market a little bit better and looking out for your profits, knowing when to get out, and it's just a great little tool that I thought you guys can all learn. Hopefully you guys like these little tips and it actually helps you with your trading and when to actually sell and when to get out. So hopefully you guys all enjoyed, and if you have any questions on any of these 3 signals, just leave a comment and I'll try to answer it for you guys. But hopefully you guys all enjoyed the video, and if you did, please leave a like, it really helps, and I'll see you guys all in the next video. Peace out.